Hey guys, welcome to the TipRanks weekly recap. It is July 30th. It's Friday. I hope you guys are all doing great. No Julie today, but we're going to have a guest here in a second. We have Sam waiting in the green room. Sam, thanks for joining us. How you doing, man?
I'm doing well. Thanks for having me on. I've been doing some videos weekly, but it's nice to have a more of a live setting here and going over more than just one stock at a time. It's cool to talk about the whole market.
I know, yeah. I love doing these live streams and answering everybody's questions and all that good stuff. And we've got lots and lots of stuff to talk about. Today was like the earnings week of the century. We had Amazon, Google, Facebook, pretty much everybody meeting or beating expectations by quite a bit. But Amazon specifically is having their worst day. It's a pretty ominous title that I just read on CNBC. Their worst day since March of 2020. They're down, I think, over 7% today. Last time I looked, 6.8% now. So they're recovering a little bit. And they barely missed. I mean, they had a $100 billion quarter, 3 quarters in a row. So they're crushing revenue, but not quite meeting expectations. They missed by like $2 billion or something like that. What are your thoughts, Sam?
Well, I think most of us realize that we're going to get back to normal at some point, right? Like Amazon's not going to continue growing at the pace that they're growing. We saw the same thing with Facebook too. I believe they talked about how, they crushed earnings also. On both revenue and earnings, but they said we're not going to continue growing at 50 or 60% a year, and investors don't want to hear that. But the fact is they are getting cheaper all the time because their earnings are still growing quite quickly. And I know I talked with a couple retail investors, and they said that they were definitely buying this Amazon dip because it's going to return. They think it's going to return right back to normal after this blows over a little bit. But I think people just need to get used to the fact that online retailers are not going to grow like they did over the last year. They picked up huge market share. They have tons of parts of their business that are growing, but they're not going to hit, an extra 10 or 20 billion every single quarter from here on out. What about you? What do you think?
No, I agree. Eventually, these $1 trillion, $2 trillion companies have to slow down, right? Or what happens to all the mom and pop companies and different things like that, right? But if you look at TipRanks.com, you can see the analysts still absolutely love Amazon. Obviously, 29 ratings, all coming in with a buy with a 26% upside for Amazon. What are your thoughts on a stock split for Amazon? I mean, we're trading over what, almost $3,400. What are your thoughts on? I think it's due for a stock split because options are becoming crazy expensive for Amazon.
Yeah, I agree. I think there are so many investors that want a piece of Amazon. I know myself, even just trying to buy Google, like I can't buy it as a small portion of my portfolio and dollar cost average on a lot of platforms. I have to liquidate positions and move everything around. Over a couple $1,000. That's a good chunk of money to try to put in a stock unless you're using fractional shares. So I agree with you. I think it worked really well for Apple. A lot of people liked it. A lot of people were able to invest in them for the first time. And as you know, it doesn't affect the business at all, but it does just make it a lot easier for a lot of investors to buy into it. Yeah, that's a good point because I hadn't really considered that, but I think it would get a lot of people excited.
Right, and I think it's really, like you said, it doesn't change the value of the company, but I think there's this inherent mentality that, oh my gosh, it's cheap, right? And that's worked for both Tesla, Apple. They both did their stock splits relatively close together, and their stocks are way up since then. So I think it would help Amazon get to that $2 trillion mark, which they've been trying to get to for quite a while.
Yeah. What did you think about the Google and the Facebook earnings? I believe both of them beat both earnings per share and revenue, if I remember correctly. And I read something too about Google, the YouTube side of their business, which obviously we're big YouTube guys, is growing. They made as much this last quarter, or close to as much this last quarter, as they did all of 2020. And they didn't even give their subscription numbers. It was just their ad revenue. And then also they're bringing in more than Netflix as a platform.
It's crazy, and their YouTube Premium service is growing as well. I saw that in earnings, but both you and I started getting popular on YouTube in 2020, and that was just the nature of the pandemic and people being at home. And I think more and more content creators are out there and more engaging people, and people are watching more YouTube obviously and consuming more content. We saw that in the numbers, and I think investors and people that do marketing are realizing that YouTube is a good platform to have their ads on, right? And obviously, yeah, that's crazy. I didn't know it was all of 2020. Last quarter, they did more in revenue. That's absolutely nuts. Yeah, that's amazing. But it makes sense to me. But with YouTube growing, I wanted to talk to you a little bit about, and we'll get into Bitcoin a little bit here too, because a lot of these content creators have massive influence, right? And YouTube, they don't have the people to moderate channels. And I know this portion isn't completely finance related, but we'll get back to it, I promise. But you've been reporting on a couple people being canceled recently, like BitBoy Crypto, and both him and Matt Coors, and a lot of that seems automated, right? It seems like it's happening automatically. What are your thoughts?
Yeah, I think if you've ever seen the numbers, and I can't remember them off the top of my head because they're so large, but if you look at how many hours are uploaded to YouTube like every second, it's insane. There's no way that they could hire enough people to manually review all of YouTube, right? So they have these algorithms that are supposed to be set up. And I think, honestly, part of it might be all the scammers in the comments. I've seen multiple people saying that they were being impersonated. I think Graham Stephan got an email saying that he was going to be taken down or something, but he got to YouTube before he got taken off. He talked to someone there. But I think the scammers in the comments are another big issue. And when people take your name and then try to scam people, I think that might set off the algorithm. But it is difficult to see someone that's worked so hard on their brand just to get taken off because of something that they didn't even do. Or if they did do it, they didn't know they were doing anything wrong, because I've watched both their channels and I don't think they're not swearing. They're not, talk about violence or anything like that. So it's amazing to watch.
And I get that it's connected to these scams, and as Bitcoin becomes more and more prevalent, you and I have both dealt with it. Whenever we make a crypto video or a Bitcoin video, there's going to be people trying to send you a WhatsApp number to get you to send them some crypto and make some money with them, right? These get rich quick schemes, and Bitcoin has hit what? It's at almost 40,000 again today, right? I haven't looked at the price here in a couple hours, but let me pull it up here real quick. Yeah, crypto had a tremendous week, and partially that was because of Amazon. Yeah, they're just over 39,000 per coin right now. But there was a rumor that Amazon was going to start a cryptocurrency and start accepting cryptocurrencies as payment, and then they came out and said, no, that's not the case. And then Bitcoin fell back under 40,000. What are your thoughts on some of these companies creating their own cryptos? Do you think it's ever going to happen?
I think it will, because it just makes sense, right? I mean, it doesn't cost them very much. Sure, they have to increase security and some other stuff like that, but the amount of potential that it gives, I've thought about Disney specifically, as they can create a loyalty program. You're financially incentivized for Disney to do well. Maybe you get discounts, but it still gives them extra money because they're obviously not going to give you it at cost or anything like that, whatever it is. But I think it even strengthens the brand further, right? I mean, people love something like Disney because it's just a brand that everyone knows, respects. When you buy a Disney movie, you know exactly what you're going to get. There's not going to be anything that your kids can't see. So I think it makes sense over the long term. Now, I haven't dove into like what Amazon could do with it versus something like Disney, but it is interesting to start thinking about the possibilities, because they're endless, I think. But What do you think about it? Do you think it's going to happen this year, next year? Not at all.
No, we've seen, you've reported on crypto a lot, so we've seen, Safe Moon and Safer Moon and Safest Moon and right, and Elongate and all these ridiculous coins. Obviously, I think Safe Moon is a real project, but some of the others are just blatant ripoffs, right? And we know that. I think most people know that 90% of crypto will probably fail over time, but there are going to be good projects out there using blockchain technology. Maybe we'll get a GameStop token someday, or an AMC token. I don't know. I think AMC is really leaning into what went on in January. We were just talking about Matt Coors as well. He was another one that his channel got canceled for violating terms of service and having potentially violent streams. And that's, if any of you guys have seen him, that's ridiculous, right? And he reports heavily on GameStop and AMC and the Ape Nation. And I think I wanted to segue that into talking about Robinhood, because they had their IPO just on, was it Wednesday, right? Or was it yesterday?
Yesterday,
yeah. And they wanted to debut at $38. I think had this fiasco in January not happened with GameStop and AMC and Robinhood having to halt trading, and now they weren't the only platform that had to halt trading on certain securities, but they were the most prominent, right? And they took the most blame as well. They had to get in front of Congress and do hearings and things like that. I think their IPO would have been the most anticipated IPO of the year, but they fell 5% yesterday, and they're still down today. What are your thoughts on that?
Yeah, I mean, I think the company itself, I mean, you can talk about valuation all day, right? But there are some stocks that just don't matter valuation-wise because of the story behind it. I mean, you can talk about AMC, GameStop, some that, if you look at any normal metric, are vastly overvalued. I mean, even some people would say that about crypto, right? But people still like it. So you can look at valuation, but the thing is, if it's going to be overvalued, there has to be a positive sentiment behind it or a positive story. And that's just not the case with Robinhood. Like you said, it would have been the IPO of the year. I remember even a year ago, people were so excited about Robinhood. They loved what they were doing, democratizing investing, making it free. I think they were really the first platform maybe to do that years ago. But they've had the scandals, like you said. Probably some of the strongest communities for investors, Wall Street Bets, the AMC community, the YouTube communities, some of the retail sides that really band together and can push up stocks. They're just not behind it. They hate it. Everyone that I've seen on YouTube that's made a Robinhood video said that they're not buying. And they're buying everything under the sun, but not Robinhood because of what's happened.
Yep.
I've also seen some of their metrics. I haven't dove too deep in them myself, but they do have lower margins. They have smaller account sizes. So people that have positions or portfolios on their platform generally have smaller portfolios. Mm-hmm. So you can look at some of those metrics too and think, okay, it might be overvalued comparatively. But yeah, I just can't get behind it either, unless they just change the story behind the company, right? They never really apologized or anything like that. They kind of made excuses. Yeah. But what do you think? Obviously, it fell down. Do you think that's going to continue, or do you think it's justified, I should say, because otherwise it's a little bit of speculation there?
I think it's justified at the moment from a PR standpoint. However, I think, Wall Street doesn't care, right? And the retail investors may care, but Wall Street doesn't care. And the retail investors make up, 20-25% of order flow. Most of the money, the majority of the big money, isn't the retail investor, unfortunately, right? And I think once they have profitable after profitable quarter, which I think Robinhood will have, I think it will be a good buy in the long run, just from from an investing standpoint, regardless of the story. And I think it will eventually. I think it'll blow over eventually, maybe, because it's already been a long time. But it will probably blow over. It just wasn't a great time for them to IPO without sort of fixing their PR issues. Yeah.
Yeah, Kathy Wood did buy a chunk too. I don't know if you saw that. I forgot exactly what it was, but it was over 10 million, I believe, $10 million worth the first day. So
nice. No, I didn't see that. Yeah. That's pretty cool.
That was interesting to see as someone that, as someone that is as transparent as Kathy Woods is, that she would go for a company that is selling order flow to, the hedgies and everything like that. It's interesting to see her take a position like that, but she does like innovation, so I guess that makes sense.
Yeah, so, and I think that order flow thing, I think that's just a standard practice now, and it puts the retail investor at a disadvantage. I've seen personally trading on Robinhood, by the time I put an order in, especially if it's a market order, I've learned not to do that anymore. But if it's a market order, it virtually never goes in at the price you want it to go in or the price it says. So they're playing some weird games to have the hedgies on the background make an additional bit of money, and those pennies add up over time. Speaking of other scandals, Nikola, Trevor Milton just got arrested for 3 counts of fraud, 2 securities fraud, and wire fraud as well. Craziness. I know we both have reported on Nikola because it was fun seeing them push a truck down a hill and make billions of dollars. What's going on there, man? He just got released on bail, right?
Yeah. So I remember everyone being so excited about Nikola, but it was very short-lived because there was the hype where it went up to $60, $70 a share after the SPAC, right? And after that scandal came out, I mean, I think a lot of us thought it was overvalued at the time anyways because it was bigger than Ford. I remember that specifically. It grew bigger than Ford, which is just insane to think about. But then once that came out, it seemed like it was all over. I think most of us knew this is not the company we want to invest in. Obviously, the company is somewhat separate from Trevor at this point because they said that he acted on his own accord, but they still have a lot of the same management team, which is unbelievable, right? That either the people didn't know that he was doing this or they knew and they're still there. Either way, it's just unbelievable. But I think most of us saw it coming from a couple months ago after that big short report. But what do you think? Did you know that this was going to happen a while ago?
I hoped it would. I think it took them long enough, right? I think I watched Tom Nash's video on this today. It was great, talking about how the Hindenburg research report was pretty much handing the DOJ or the SEC just the indictment on a silver platter, and I totally agree with that. And I don't know, and that's potentially the problem with these young charismatic leaders, that people will do anything for, it seems like, right? And there's no telling whether the management team that is still there knew about this or not, but more likely than not somebody knew, right? He wasn't the one doing all the engineering. In fact, we saw a lot of evidence to the contrary, I don't know. I think it's a good thing overall, but I'm not sure what will come of it. A lot of times money cures all in these situations, and he's able to sit at home and eat whatever he wants and swim in his pools, and this could go on for years. Who knows, right?
Yeah. I hope that it stops people like him from doing this in the future. I mean, a lot of people feel like Elon's right on the edge of doing and saying what he should and shouldn't say, right? When he says his company is overvalued or undervalued or whatever. But Trevor kind of took that to the extreme, and I think it really was what people wanted to hear, right? That they were the next Tesla. I mean, a lot of people on YouTube say that in their thumbnail, but it's very different to sit there and explain it versus saying that as a company executive and then go out and twist words around when you do something that's unbelievable that a company executive would do something like rolling a truck down the hill and then say that they're the next Tesla. So I hope that stops people from doing in the future, from executives kind of skirting that line. But I guess we'll have to see in the future, because it is what everyone wanted to hear. Everyone wants the next Tesla. Yeah.
Well, and that was kind of that company sort of started the SPAC craze, right? If you think about it, they hit right after IPO, right after merger, they hit like $80 per share not that long after. It made people a lot of money who bought in early, but a lot of people lost a lot of money, because I know a lot of people that bought at $60, $70 per share and potentially rode it all the way down, hoping it would pop back up, but it hasn't done much since falling to like $20 per share after hitting 80, and it felt pretty hard after that report came out.
Yeah, I know a lot of those companies that were big back then have done that too, like Ride Stock. It just is continuously around $8, $10 because of some of their issues too. But yeah, hopefully no one was jumping it. Well, obviously people jumped in at the top, but hopefully they didn't go all in or anything like that, right? That's why I like diversification. But again, hopefully this doesn't happen in the future. So knock on wood.
I agree. Yeah. I hope so too. On that note, yeah, I think we're good. Let me know if anybody has any questions that they want answered in the comments. Sam and I will be here for another few minutes or so. Another big company that had earnings just this week and has fallen a ton today is, let me see where Pinterest is now right now. Yeah, they're down almost 19% today, trading under $60 for the first time in a while. And I've traded this company a couple times before. I did some options trades. It was risky, but right around earnings last year. But it hasn't been this cheap. It fell to about $55 in May, but the whole tech world pretty much fell. It seems to bounce off these levels quite often. What are your thoughts on Pinterest?
I'll be honest, I haven't looked too deeply into it. I know that you were talking about how you have some more personal experience with it. I know my fiance uses it, but
Yeah.
I don't think I've ever met another guy that uses Pinterest. So it's just not anything that I have a good feel for.
Yeah, my wife works in marketing, and in terms of their return on investment versus other platforms like Instagram or Facebook or running ads or things like that, Pinterest is by far hands down the winner. So from an ad perspective, they're fantastic, really fantastic. Yeah, I find their platform strange to use. But a lot of people like it. But that's the reason they've fallen so much, is because their monthly active users actually went down by 7% in the U.S. It went up internationally, but went down quite a bit in the U.S., and that's worrying investors for sure. We've got a couple questions in here. Jason is asking about pants. What do we think about Levi Strauss Company? It's up today a little bit, up about 1%. But comes with a strong buy based on 6 ratings with an average upside of 25%. I personally don't pay attention to Levi Strauss & Co. at all. Do you have any experience with them at all, Sam?
I don't. I like their pants a lot, so I think that is usually a good check, first of all, whether you should even look at a company, as if you like their product. But I personally haven't looked into the financials too much. They've come up a lot over last year. They fell all the way down to $9 a share, now up at 27, but I haven't looked into their financials too much.
Yeah, and I think, I think a lot of investors got away from looking at financials last year. I think everybody was winning, every stock was winning, right? So I have gotten back to that fundamental. I'm definitely doing less swing trading than I did last year, but you almost couldn't lose last year. So you definitely have to pay a little more attention to the numbers. And that's why I agree with AK here. He says pins is a steal. And it looks like they got in at 25 in July last year. And then again at 20 in February. Awesome. That's amazing. But yeah, if you look at Pinterest on TipRanks, the analysts like Pinterest either as a buy or a hold with an average upside of 22% now after that fall. And I agree. I think this will recover, barring some sort of meltdown in the market. I think we'll see a quick recovery on pins over the next couple weeks probably.
Yeah. One company that I've noticed is down actually pretty big today that didn't even report earnings and really doesn't have much news on them, but I think it's a piggyback off of Amazon and maybe Pinterest a little bit too, is Etsy. They're down 7.3% today. And I picked some of their shares up after their last earnings report. They have their earnings coming up here soon, but they ran all the way up to 252, now down to 185. They're a company I really like too, because there isn't a lot of competition there, because people kind of compare it to Amazon. But the thing is, what they do is so different. Amazon's bulk, right? It's like buying something wholesale, but Etsy is homemade. I think a lot of people like the fact that it's homemade, but after Amazon's numbers, maybe after Pinterest too a little bit, the numbers have come down a little bit today. They are a strong buy on TipRanks also with a 20% upside.
Yeah. No, I part of the business that my wife and I do as well is we have some Etsy stores. So I love Etsy. Etsy has a place in my heart, and I purchased some in the 30s in March last year. Absolutely love this company. But yeah, it was definitely a pandemic play as well. People being home, thinking they're creative, starting Etsy stores, going crazy trying to sell things. And that was a huge boon for Etsy and their revenue. So they just blew out numbers. I mean, growing by 100% plus some quarters. So fantastic growth opportunity for Etsy. I don't know how much more is in store though over the next, because they have gone up so much since March last year. I mean, we're trading at what, 185 or something like that now. What are your thoughts on the share price and whether or not there's much more opportunity over the next even year?
Yeah, so I think obviously it's come down a decent amount, but it is pretty highly valued compared to where it was. The thing that I look at though is we are in the summer. People are feeling a little bit more comfortable around the pandemic, right? People are maybe moving out and buying in stores again over the last couple months. Thing is though, it is getting worse in a lot of states. Different countries are shutting down. We're getting closer to fall and winter. I know around me it gets very cold and very snowy, so people are going to start online shopping again. So if they're buying more in person now, I think they'll shift back a little bit. And a lot of the people that they got to order on their stores are going to be there long term, right? I didn't even think about it today, but our dog has been biting sticks. We just got a new puppy and she is biting sticks all in the yard. And I was like, okay, I have to go to find some toy for her that's like a stick. And my fiance ordered an Amazon package. One day later, she got it, and it's like this stick package. But I didn't even think about that. But I mean, there are still use cases for that, even in the summer. They're going to keep on growing over the long term. It just probably, like a lot of these other companies, isn't going to be as fast as people were expecting or wanted to see.
Well, yeah, and despite the massive share price, and growth, there's still really only just over a $20 billion market cap company. So there's, from a tech standpoint, they're still relatively small. So there probably is a lot more growth there. And user growth depending on how they capture that ad revenue as well, because that'll be a big thing. So
yeah, great.
Awesome. Well, I don't see too many more questions in the chat, guys. Thank you so much for joining us. Sam, thank you for joining us today and filling in for Julie. She's on vacation and hopefully enjoying herself. Everyone, have a great weekend. Sam, thank you so much.
Thank you. Have a good one.
All right. Bye-bye.
Bye.